without machine learning also you can understand public sentiment. That's by understanding the options market. So that you can see in one of our courses. The course name is Trading Using Option Sentiment Indicators. So this is also in the same learning track. So sentiment analysis learning track, where there are several methods proposed to understand the sentiment. As we move forward, there are option specific methods also, which is put call ratio. So this is again a famous indicator or famous way to understand how people are viewing the markets, because let's say people are positive in the market, they tend to buy call options. You can understand the option chain and see who is winning, like who is whether the calls are being bought or whether the puts are being bought. So here the method is PCR, which is put call ratio. So you just try to divide the volume of puts traded on a particular day to volume of calls traded. So that's going to tell you who is dominating. Let's say if puts by calls is greater than 1, that means more puts are being traded. That means people are banking that like the sentiment is negative at that moment, since most of the people are trading puts. Similarly, if put by call ratio is less than 1, you can assume that many people are trading calls and the holistic sentiment is positive. And we have also proposed a trading strategy. So, and I'll try to explain in a more simplistic way. So this black curve represents put call ratio. It's just a division between number of puts traded by number of calls traded. And this yellow curve is simple moving average of the put call ratio. And so how we trade is this blue line is one standard deviation away from the mean, and this blue line is one standard deviation below the mean. So if the put call ratio is increasing and it reaches this one standard deviation line, you expect the put call ratio to come back. That means you expect the sentiment. If it is going up, put call ratio is going up, that means sentiment is negative. So since it moved so far from the moving average, you expect it to come back. That means you expect the sentiment to turn around to positive. So this is the place where you tend to buy stocks or buy this particular contract, expecting this put call ratio to come back. Similarly, put call ratio falls and moves away from the moving average and comes to one standard deviation line. So this indicates that market is overbought and lots of people are buying call. So there is at some point market will correct and again the negative sentiment may creep into the market. With that as an assumption, you tend to take long positions expecting the put call ratio to correct to the mean. And this is the basic strategy here. By using PCR, you understand the sentiment, and then using this one standard deviation moving average, you trade the sentiment. But for any good indicator or for any good strategy, there should be a stop loss. So these two lines indicate a stop loss for you. So these lines are drawn 2 standard deviation away from this moving average of PCR. So once you bought a long position, so if the PCR is below this stop loss level, you will come out of it, because basically there must be a trend forming and there is increase in calls. So, and same case in the upper side also. So this is how you understand sentiments using the options market.